Hi, welcome to this video today. It's all about one of the best Forex trading tips of all for success in the markets. It's one that every pro trader knows, but most beginners who come in the market don't think about this trading tip, and they basically quickly lose their money. So what is the trading tip? The trading tip is to put your stop loss in a place that will basically keep your risk to manageable levels and give you good profit potential. Okay. Now, I'm sure a lot of people watching this video are going to say, well, hey, every Forex trader does that. The answer is they try and do it, but they make the wrong assumptions about how Forex markets move and the concept of risk in the markets. And what they'll tend to do is they'll tend to get a stop loss and place it very close to their entry to keep risk small. And then they'll calculate where their target is and work out what their risk reward is. So they might say, well, I've got a risk reward of 5 to 1 on this trade. I can make 5 times as much as I could lose if I get hit on stop. What that is, though, that is just an opinion. That is not the risk reward of the trade. It's an opinion, it's nothing more. The probability is the most important thing when placing your stop. What is the probability of your stop being hit? Well, if you place it too close to entry, then the probability is very high you're going to get hit. And I'll give you an example. A lot of traders, once come in the market and they'll just put their stop loss behind the previous day's low or high. And I used to see this as a broker. Forex traders do this continually. They'll put their stop as literally as close as they can. The market is volatile, it'll come, it'll take their stop, and then the market will go the way they thought, but of course they've been stopped out. Placing your stop loss too close is a huge mistake. In Forex markets, you have to take a reasonable risk to make a reward. And to give you an idea, as an example in pips, if you're trading the markets, you should never really have a stop loss closer than 50 pips. Normally it should be 100 to 200 pips away. And I know a lot of people watching this will say, but hey, day traders put their stops 10 or 20 pips behind. My answer to that is day traders lose. Forex markets are volatile. You've got ranges of a couple of hundred pips a day in many pairs. So how can you have a stop loss 20 pips away and make money longer term? The day trading myth is a huge one, that you can actually trade with such small losses. You will never see professional traders do that. Professional traders will basically put their stops a reasonable distance away from their entry point, and they'll actually understand where other traders, or the mass of traders, might have their stops. So their stop loss will be one level back. Now, you might be saying, well, they're risking a bit more. Yes, they are, but their probability of winning or reaching their target is far higher than the trader who wants to put his stop too close to entry. There's a big move in Forex markets to make the markets appear like they're not risky. And you see it all over the net. People saying trade with really tight stops. You can make regular income every week. That is not the reality of Forex trading at all. Forex trading is all about taking realistic risks. And by realistic, I mean you've got to risk to make money on the other side. If you want to catch big trends, you cannot have your stop loss too close. The markets today are highly volatile. So what you need to do is, when you look at placing a trading signal and you're thinking about where to place your stop, have a look where everyone else is probably going to place it, which is going to be the first level back, okay? And then basically put your stop behind theirs. So make sure that it's back behind theirs. You don't get taken out by short-term volatility. And I think, in terms of market timing a trading signal, I've never considered that hugely important. I consider where I place my stop far more important. I'm not after pinpoint entry. I don't think many professional Forex traders are. What they're after is a good entry with good risk reward, and then to basically think about where that stop is going to go so they can stay with the move and not get stopped out by short-term volatility. So that would be a trading tip. I think traders can really really should learn, and you should spend as much time thinking about where your stop loss is going to be as where you're going to put your trading signal in. It's vitally important to have your stop to give you protection, but not too close that you're stopped out by the noise. Thank you very much for watching me. Take care and have a good day.